Hey soldiers, there are 4 places you can keep your money. Now each of these places serves a different purpose, and each of these places are going to have your money perform differently. Let's just hop right into it. The bank. Now many people have sent me messages saying, hey look Tyrone, you keep saying that a bank is not the best place to keep your money. Where is the best place to keep your money? Let me clarify. The bank is not the best place to keep your money if you're looking for a competitive return. If you're looking for a return that's going to match or beat inflation, no. The bank, not even a high yield savings account, is a good place for your money. However, a bank is an appropriate place to keep your short-term money that you want to have for that emergency/opportunity fund. I'll tag a video that we just did on just that subject further on down the road here. So understand, all of these places I'm going to mention, the bank being one, they all are places you can keep your money, but you must understand that these 4 places are like tools in a toolbox. They're like a set of screwdrivers. Each one is not intended to perform the same function. Now, let me give you another example of what a bank's function is. A lot of people look at a bank from the perspective of just keeping money in it, but it's also appropriate to look at a bank as an institution that you can get money out of. And the way I mean that is by taking a loan. Sometimes you need to take a loan. It's more financially astute for you to get a mortgage loan, for example, as opposed to taking $250,000, buying a house with cash and locking that total amount up. That's going to prevent you from having $250,000 of liquidity. It's probably going to cost you from an opportunity standpoint because you can't do other things with that money. And remember, mortgage money, even though interest rates have risen, mortgage money is typically some of the least expensive money you can buy. So you don't want to you don't want to put yourself in a position where you've locked up money. You want to leverage, and a bank helps you leverage by being able to lend money. So that's a bank, okay? We're not putting money into a bank and expecting some phenomenal return that is going to beat inflation. Again, you put money into a bank expecting it to grow, what's going to happen is you're going to lose money because inflation is going to erode the value because inflation is rising higher than the interest rate. Again, even on a high yield savings account. So the bank is for that short-term money or to take a loan. Where else can you put your money? Next up is the brokerage. Okay, so you put your money in a brokerage, and of course, you just don't want it sitting there in the account. You want to put that money into play. So you want your money to grow. You got to get out there, start investigating individual stocks or taking a look at things like the S&P 500 ETF or index funds, okay, and investing in those. We did a video on that here recently, so you can take a look at that as well. I'll tag that also. So the brokerage will allow you to get your money growing faster. Now, what we did, and as long as you invest wisely. Now, you go out there and buy a bunch of, penny stocks. I don't know what to tell you. Nothing's guaranteed, but penny stocks, you probably would do as well going to Las Vegas. So you want to invest in quality indexes, ETFs, or individual companies, and you got to do the research in order to diligently go about doing that. But the brokerage, now that's where you get into the territory of 10%. So your money can double, look, every 7.2 years. How do I get that? Well, rule of 72. You take 72, you divide by 10, okay? You're going to get 7.2 years. That rule allows you to guesstimate how quickly your money's going to double. Go look at the community page. We just put a post up about that details that process. Okay, we got a bank, We got a brokerage. Also, don't forget, the brokerage is going to allow you to purchase stocks, bonds, mutual funds, ETFs, index funds, okay? The panoply of paper assets. About 90% of your paper assets are going to be found there. We do have a paper asset that can be combined with different types of other paper assets like bonds or index funds, for example. It's the insurance policy. So we got the bank, we got the brokerage. Now we got the insurance company, the life insurance company. So in that scenario, what the life insurance company will do, they will say, hey, put your money over here with us. We will give you a death benefit so that when inevitably you shuffle off this mortal coil, we will pay your beneficiary an amount of money. Okay, that's the primary purpose of an insurance policy. But you get a permanent insurance policy, it's also going to do other things for you. It's going to allow you to build up cash value. It's also going to allow you to have tax advantages so that you can eliminate, in most cases, future taxation for the money that's in that particular vehicle, the whole or the permanent life insurance policy. So that's another very interesting and valuable place where you can keep money. But you see, again, we got a different type of, mechanism that this is fulfilling. Also, I want to address something real quick. A lot of people are going to say, oh, insurance company, it's going to cost you, cost of insurance. It's going to cost you to put your money into an insurance policy. Yeah, it costs you to keep your money anywhere. You want to keep your money under your mattress? Go right ahead. It's going to cost you. It's going to cost you in terms of the value it's losing as opposed to inflation. Okay? It's just because it's not working at all. It's literally sleeping under your mattress. So wherever you put your money, there's going to be some cost associated with putting your money there. I just had to replace a well tank, okay? And in a property, all right? Replace the well tank. So yeah, that's a cost, maintenance of real estate, right? Wherever you put the money, it's going to cost you. Now, finally, fourth place you can keep your money, in your business, in a business that you own. You can reinvest in that business, grow it, and thereby increase profitability as long as it's well managed, right? So you can literally give yourself a raise in that scenario. You can say, all right, I need to make X amount of dollars more. And I know that based on my trajectory building this business, I know that if I can, make it more efficient here, do some more lead generation over there, I can get that money that I'm searching for and probably more. Okay, maybe I can expand the territory to another state, a neighboring community. Who knows, right? Buy another truck. Investing in your own business that you own, okay, is another place where you can put your money and have it kick off. Check this out. According to the Small Business Administration, a well-managed small business in a competitive field can expect to see returns annually of anywhere between 15 and 30%. All right. So those are the places where you can keep your money. I hope I've addressed that. Guys, I will talk to you soon.